Good morning. Week of Jan 29 to February 2nd, today February 4th. Fabian Onetti for Winston Capital, and clearly a lot to talk today, but we're going to leave that for the end. First, a look at what happened. We had tons of earnings last week. Facebook, Netflix, Google, Amazon, Apple, to name a few. Emerging market stuff. We had a very good trade last week on Amazon. Coming earnings this week, we had a State of the Union, some more numbers in Europe, and of course, two things: a big correction on Friday, what it means for the markets and for us, and what is coming next week. Starting with Barron's, there was not much to talk. Obviously, a lot to talk about what happened on Friday. We're going to leave that for the end, the implications, what we think was the point, so we're going to leave that. But let's start the way we started the week. We thought that Amazon was going to be a great trade, mainly because it looks like some people did the research, and since October, no analysts that covered the stock had amended their numbers. And as you know, we discussed it here many times, as we ramp into the Christmas seasons, the news were very strong around it. You know, online sales, regular sales, foot traffic. So many people thought that Amazon was going to have a blowout quarter, and no one really told the numbers. That's what happened. $60 billion in revenues, $2 billion in profits. And if you look at Barron's and the specialized press over the weekend, basically the company fired perfectly in all cylinders. We thought it was a good idea. We recommended to go long before the earnings or sell some puts. And even on a day like Friday, the stock ended up 4 or 5%. Great trade. Hope you guys took advantage of that. On the news and on the names, Facebook with good numbers, our favorite, Netflix, excellent numbers, unbelievable numbers, Google so-so, Apple, that's the other one that we were looking. A lot of rumors and comments that the iPhone 10 was not selling, that was not doing very well, and I was very surprised, and I discussed that because I bought the phone as it came out, and it's truly amazing. Bigger screen, faster, great view, but most important for all of us who depend on these smartphones, tremendous battery life. So I was kind of really surprised. Yes, it's very expensive, but I was really surprised by the fact that people were saying that it came out and the numbers were right. Tim Cook said we have never sold a new phone so big and brisky like the iPhone 10. The numbers were slightly off because the quarter has less days than the regular fourth quarter, but in any event, it was a very good number. So we like the stuff. We had also State of the Union, very expected, typical. The President of the United States address all the members of the Congress, plus the Supreme Court, basically all the branches of the government. Kind of unexpected. He obviously spoke about his tax reform that had just passed, a big push on immigration. We'll see what happens there. And finally, a 1.7 trillion infrastructure spending. Unfortunately, not that many details on that. We were looking that maybe there were some tradable ideas, but in any event, we're like, if you think that that's going to happen, names like Caterpillar, 3M, John Deere will be obviously beneficial. You will need to move stuff, you'll need glass, you need bricks, mortars, etc. Those companies will benefit. Also, last week we had a big collection of numbers from Europe, from consumer confidence to PMI to inflation, all very positive. Remember, this is about world growth, not just United States growth. So that's positive on that side. One of our stocks got a little sick. PayPal, we like it a lot. The stock was down 6% because it announced that it will stop their partnership with eBay. Kind of unexpected, and it's bad because that was the main processor of PayPal. But remember, our thesis on PayPal is Venmo and online payments. PayPal is the leader when you buy anything on the internet, and is the leader with their application Venmo that is very, very popular amongst millennials to pay each other. Very, very useful. So we, stock is down. We still like it. We are still long, and actually it recovered a little bit. So let's go now to the real topic of the week, which was the correction on Friday. And the correction, unfortunately, has all the colors of a nasty correction. As I've been saying earlier, if it's just the market that corrects, that's okay. The market's been rallying a lot. It could not be bad to have a healthy correction. However, if you see the dollar rallying that's a problem, because that means that the money is coming home because the problem is bigger. And what really might be happening here is that for the first time we had evidence of inflation, the big wolf that has been missing here. It looks like on Friday, labor report that was very strong, but also for the first time we had wages annualizing a growth of 2.3%. Clearly a first sign of inflation that brought the interest rates to 3% on the 30-year, 2.80 on the 10-year, and that clearly affected the market. Remember that you had last week in Davos the administration talking about a weaker dollar, so the dollar was weakening on that, and all of a sudden we have a big snap on the dollar. Commodities went down, very interesting. Gold went down because of rates. So now we have a little bit of a perfect storm swirling around a market that was a little bit overextended, but then these other variables, the dollar, the interest rates, the numbers of inflation there coming up. So we'll follow closely. Again, we'll see what happens on Monday. I don't think it's going to be dramatic. However, it's very important to take a look. Emerging markets got spanked on Friday as expected because the dollar is pulling back. The riskier assets are the first ones that get sold. Our favorites like Argentina, Brazil suffer a lot, equity and fixed income and FX. So we'll be looking at that. If the market keeps on, we might take a 10% off the table on risky assets. Don't know it yet. And I'm sure that the Fed will be a little bit worried because remember, we are now phasing out purchases of bonds in Europe, in the United States. So that might be also an issue. No one is buying as many bonds, so rates are perking up with these inflation numbers. It's now all these combinations that could make the market very scared. So we'll keep an eye. We'll keep you guys informed like always. And finally, for this coming week, again, we have a lot of earnings, more on the industrial section, GM, Walt Disney, Twitter. Many of those companies will be reporting. We will be following, and like always, reporting back to you. Like always, you can get more information in winston.capital. Follow us on Instagram in Winston Capital Advisors, and the same in Twitter to keep up what happens during the week. Have a great week. Fabian Onetti for Winston Capital.